Days on market, the metric you should be analysing when buying and selling. Whether you are looking to buy or sell an investment property or owner-occupied property, understanding the days on market for a local area could be the most powerful piece of data you get your hands on. Firstly, when buying, by understanding this key metric, you are provided an indication of the stability or volatility of a region. If the days on market are high, it can indicate that the demand is low. You will need to do further research to understand why, to be able to make an educated decision as to whether a region is investable from a purchasing perspective. Conversely, if the days on market for a region are low, but for a specific property they are high, this could indicate a few things. Firstly, potentially the property has been listed at an unrealistic price, or perhaps it has unforeseen structural problems, or the maximum potential of the property is hindered by a flood or bushfire overlay. Whatever the case, you will need to carry out thorough due diligence to uncover the reasons for the increased days on market. But all may not be lost. If your due diligence proves the property to be a worthwhile acquisition, you may be able to leverage this metric to negotiate a fantastic deal with the vendor. Having a professional on your team to navigate these negotiations can definitely help to get the deal over the line, as they know how to get to the bottom of what's important to all parties to achieve the greatest result for all. If days on market are low, you will need to act swiftly, as the market is moving quickly and there's a high likelihood the property of interest may go under contract very, very quickly. If you don't want to miss out, you'll need to have all your ducks lined up and be prepared to make educated decisions very quickly. Again, to avoid making hasty decisions, professional support is extremely important. This will avoid buyer's remorse. Similarly, if you're looking to sell and your local area has increased days on market, you may need to price accordingly, as by sitting on the market too long, your listing can go stale. You get decreased numbers through the door at inspections and open homes as the weeks go on, and it hinders the opportunity to move forward with your plans, not to mention the potential additional holding costs. This is especially important when looking at the viability of a flip project or selling off land or new developments. If days on market are high and you're looking to sell, you will want to strategize with your selling agent as to how to best position your property. Again, you don't want to be overpriced and run the risk of the listing going stale, but having a strategy in place as to how the property will be marketed, priced, and ultimately sold will position you to achieve the greatest result in a strong market. To understand this metric and how it relates to your personal situation, please reach out to any of our team at overandabove.com.au.